today. Well, let's discuss the market and this development further ahead with Aditya Sood, fund manager at InCred Asset Management. Aditya, great to have you with us on the show. It's a good green morning and the market's gotten kind of used to it. Let's actually discuss this big news on HDFC Bank and what it really means, because I think for the longest time, the market has been waiting for that big bull run to start playing up on blue chip bank stocks as well. How do you view today's announcements with respect to HDFC, and what is your stance on Frontline Banks?
Yeah, so we have been, slightly turning positive on Frontline Banks, after being underweight for like close to 6 months. And the reasons are very, very simple. I think so. If you look at banking as a space after 6 months of underperformance, possibly it is one of the most reasonably priced space if I look at sectors. Secondly, there is considerable room, for price to book multiples to expand over a period of time, because essentially, if you look at retail banks, and that is true of HDFC and Kotak, last 5 years practically returns have been 4 to 5 years returns have been zero. So our view is that as they gain market share, as the credit growth accelerates, obviously there is some bit of room in terms of expansion. And what we are seeing in for example, Federal Bank reported the numbers today. What we are seeing is that the loan growth continues to be very, very strong. So the price to book multiple expansion coupled with loan growth, and obviously asset quality continues to be decent for a lot of these large cap banks.
Federal Bank is the other big mover on the back of its Q1 update. The stock has hit a record high. But Aditya, particularly on HDFC Bank, now this was a trigger which has played out. The next one will be the earnings, when they report their Q1 FY25 earnings. And I remember last quarter was a bit of a disappointment. So particularly on HDFC Bank, what is InCred expecting? Do you think earnings can provide that next trigger, which will drive the next leg of an upside for HDFC Bank?
I think so. More than earnings, people are really concerned about deposit growth at this point in time, because, there seems to be a deposit war, sort of a situation which is going on, particularly on the banking side. As far as earnings are concerned, there was an element of, one-off with the management also highlighted, and that came essentially because of the merger from the asset quality side. I think so. Earnings are going to be key. But what we see, it is more about under ownership and, one round of sell-off, because, essentially a lot of people thought that, the stock has underperformed massively. And obviously, it is a very large weight in the, MSCI index itself. So what we do believe is that, it is more of, under ownership and market clearly looking at incremental deployment or in terms of, under ownership. And secondly, also, people are focusing on areas wherein, there is considerable margin of safety. And obviously, there is an element of, where can you put, large sum of money to work as an asset manager. And that is the reason why we are seeing, some bit of catch up in terms of, stocks wherein, essentially, if you look at, IT, for example, what we are essentially seeing at this point in time is that after 5 quarters of discretionary spending not picking up, what people are expecting is that, this is a good space to be in. And this is where consumer was, 6 months back. So I think so it is more driven with, under ownership and, putting a large sum of money to work.
Absolutely. Got your point. So it's more of a tactical play, perhaps on HDFC Bank, Aditya. We want to ask you also just purely on fundamentals and earnings. Which are the bank stocks that you like? But before that, allow us to go to our colleague, Abhishek. On fundamentals, we've discussed the tactical move on HDFC Bank. Purely on fundamentals, where would you put your money on banks? Whether it's large or mid-cap, I mean, you can pick any market capitalization.
So we like banks, wherein there is considerable optionality of, price to book multiple expansion. So if you look at, Federal as a case in point, ROE profile is, closer to 15%. There is obviously impending CEO change, which can act as a catalyst, from a near-term perspective. If you look at the price to book multiple, it is trading at 1.1 time, forward. If you look at, ROAs, and generally our framework on banking says that, possibly ROAs, there are very few banks which have ROAs northwards of 1.5%. Obviously the big banks in India have got ROAs northwards of 2%. So if we are considering a mid-cap sort of a bank in our portfolios, we would look at, scope for ROA improvement. And what we have seen is that, price to book multiples move more or less in line with, they have a very higher correlation of ROA improvement. So we are looking at banks wherein there is significant scope of ROA improvement, and that includes, Federal, that includes CSB, which we own. Obviously, both these banks have got, considerable amount of gold loan as a part of their portfolio. So we like secured lenders at this point in the cycle. We also have an exposure towards NBFC, which is obviously, majority owned by Federal Bank, which is known as FedFina. So if you look at, FedFina, for example, they would have 85% of their book, which is in a combination of mortgage and gold loans. So mortgage and gold loans within banking space, if we are evaluating a, small mid-cap bank, becomes a very, very interesting combination at this point in time.
Okay, so you like CSB and you like FedFina, which is owned by Federal Bank. Aditya, what else? The last time we spoke to you, you said you're overweight on technology, auto, and consumption. Has there been any shift in your portfolio, and can you talk about it?
Sure. So on the technology side, we like product companies, particularly wherein there is got a lot of scope for expansion in terms of, headroom in terms of margin improvement. And we own, a company known as Intellect Design Arena. What we structurally believe is that, there could be optionality in terms of, margins moving from 21%, which is getting reported currently. Obviously, it is a combination of the GEM contract, which they have, sort of vacated very recently. That would lead to a scope of, working capital improvement for them. More importantly, for structurally speaking, I think so margins can move from 21% to more like 24 to 30% over a period of time. A 3-year view, what we are forming is that, margins can be as high as, 27 to 30%. One of the themes that we like is BharatNet. There is an impending order, I think so. This is going to be a more or less in line with a $10 billion order, which is going to come through. And we like Tejas Network here as a proxy play on BharatNet. I think so. The TAM is expanding very, very rapidly. And once BharatNet contracts, come through, and it is going to be also beneficial to the cabling companies, so we own Finolex Cable in this space. So this is a theme that we like a lot. I think so. TAM is expanding very, very rapidly. More importantly, the profitability that we are going to see in terms of improvement in profits, and these companies are, more or less reasonably priced in our framework. So we like this complex. We like, obviously, the ARPU growth story on the telecom side, but we are playing it through companies like Tejas, which obviously are going to benefit. On the technology side, we like companies which are focusing on a combination of discretionary spending, because we expect post the US election, the discretionary spending to pick up. If you look at the large cap technology companies like Tech Mahindra, Infosys, or TCS, the dividend yield will support. So I think so valuations are very close to bottoming out here. And as and when the US elections are behind us, possibly this sector should do well. So we have an overweight stance on technology as well. On the consumer side, we like companies which are more exposed to rural as a focus area, wherein we have got Hero, we have got Stovecraft on the consumer durable side. And what we are witnessing now on the consumer durable side essentially is that there is demand revival, particularly on the rural side. So the clear-cut focus area, and this is now getting reflected, for example, in the SSG growth that VMart is also reporting, because essentially VMart has got more exposure to tier 3 and tier 4 as a play. So what we are seeing is that, same-store growth is improving over a period of time. On the rural side. So we like these plays which should benefit on account of a rebound in rural consumption.
Okay. All right. Good chat. As always, Aditya, thank you very much for joining in. Appreciate you being with us on the show this morning. Well, that's a view coming in from InCred. Well,